Hello, my name is Kevin. I'm the contractor CFO. Welcome to today's video. And today's video, we're going to go over working capital. So buckle up. We'll just jump right into it here. First off, though, a little bit about me in case you haven't seen any of my other videos. I'm a contractor CFO and COO. All that means is I want to help you make more money in your business, whether it's through looking at the financial data and figuring out how to optimize that, or whether it's more operational type stuff that a COO would do as far as streamlining all your processes or just trying to see if there's a more efficient way of doing things so you can get things done faster, quicker, cheaper, all that kind of stuff. I don't want to overcomplicate it. A lot of it is just small business tax and accounting. That's how I really got into this. I'm an enrolled agent, meaning I can represent taxpayers before the IRS. Hopefully, maybe the IRS will just go away, and then I don't even have to worry about that part. None of us would. But anyway, the enrolled agent can do the same things a CPA can as far as the tax stuff goes. Um, Really, I want to help small businesses lower taxes through proactive tax planning. So we're not going to be reactive. We're going to try to do more forward-looking, more planning throughout the year type stuff to lock in those savings. And I'm a former insurance premium auditor, meaning I used to do the workers' comp and the general liability insurance audits that you all love so much. So I know kind of the ins and outs of that and how to minimize those expenses as well by tracking the right paperwork, the right data, all that kind of stuff. But let's get into it. Working capital, maybe you've heard of it. Maybe you're kind of aware that it's an important thing, especially in a construction or contracting business. Maybe you're not sure quite what it is. In technical lingo, it's current assets minus current liabilities. And all that really means is it's essentially how much cash do you have for expansion, purchasing materials in advance, all that kind of stuff. So that's really the end goal of working capital is to say how much money do you have left over to be able to spend on other things. So um, current assets would be stuff like the cash that you have in your bank, and then it would be like your accounts receivable, like all the outstanding invoices that you have. Like you're going to get paid on, like that money should be coming in the near future. It's just not in the bank yet. And then current liabilities would be things like your credit cards, your account payable to your vendor, suppliers, subcontractors, all that kind of stuff. So it's kind of like, okay, you've done a job, and then you have the money is expected to come in, but a lot of that money that's coming in also has to pay all the bills that have been piling up for that project. So you're gonna have money going out. And so really it's kind of, well, how much extra cash do I really have to work with here if I'm thinking of buying a building, or if I need to buy some more equipment. I've got payroll coming up. I need cash for payroll. Like, how much money do I really have to work with? That's really what the essence of working capital is. How much cash do you have that is freed up to do other things? All right, and really here's the problem is that on paper you look fine. So if you look at your current assets, like yeah, you have some cash in the bank and you might have like a huge AR, balance. Like you've got a lot of like people owe you a ton of money. So on paper it's like, yeah, I'm owed a lot of money and I'm owed way more money than what I owe to other people. So once all that money comes in, I'll have no problem paying off everybody else and I'll have a good profit. But that's not always, what happens. AR takes too long to collect, so you're tight on cash. Like you're counting on that money coming in, but is it going to come in on time? Or maybe it's scheduled to come in 60 days rather than the next 30 days. It can be really irritating. Your AR, it can take longer to collect. Meanwhile, you need to buy materials on credit, but you don't have enough credit, and the vendor bills are piling up, and you can't pay those because you haven't been paid on the other stuff yet. So it can be really frustrating in your business because it's a timing issue. Like your suppliers are expecting to be paid right away, and you're expecting to be paid by these other people that are just kind of taking their time working through their complicated accounting department. Depends on who your customer is and everything, but sometimes it just takes forever for them to cut a check. All right, so the solution here's kind of the main solutions here to increasing your working capital. Some of these are kind of obvious, but kind of impossible. So, like this first one, need to collect AR faster. Like, yeah, it'd be great if you got paid the minute that you completed your part of the project and walked off that job site with a check in hand. That'd be the ideal situation. That's probably never going to happen, right? So, step one, like, can you collect your AR faster? Can you have agreements that are like net 30, net 15, something like that? Like, can you build in some incentive into your contract that maybe you give them a 3% discount if they pay within the first 15 days of completion or something like that. Like, is there anything you can do to incentivize getting paid quicker? That's one thing, but that's again, that's not always possible. The other option you have, or another thing you can work on is there any way to stretch out payment terms to suppliers? Like maybe you're currently like net 30. Is there any way to stretch it out to like a net 45, a net 60? Like, is there any way to work with your suppliers and see if they're willing to stretch out your payment terms because it's taking longer for your your invoices to come in on the project? Some suppliers might be willing to work on that or might understand, depending on the industry. Others may not. So it may not always be possible to do that. So really, oftentimes the solution here is you need access to lower interest rate line of credit. All right. You probably already have some sort of credit card that you're using in your business and racking up the balance and trying to pay the statement balance off so you're not paying interest. But if you do get hit with interest, it's going to be like in the 20-30% range at least, oftentimes, and that can really hit your business hard. So the option is to try to find a lower a line of credit that's typically going to have a lower interest rate than a credit card. So is there any way that you can build credit and find a low interest rate line of credit? That would be another option because then you can kind of use it like a bank account, like you don't, it's like a credit card, but better payment terms and stuff like that. So you can just draw, you can do cash draws from it to deposit into your bank account to make payroll or pay other operating expenses while you're waiting for those outstanding invoices to roll in. So that's one option, probably the most feasible. Or you have to figure out how you can build up more cash that just sits in your bank account so that you have more room for it to like get drawn down and increase back up and drawn down. Like you just need to see if there's a way to build in more flexibility on your cash, but that can be hard because you need to pay yourself. You're trying to expand, or you need new equipment, so sometimes that's just not an option. So that's why a lot of people start falling back onto that line of credit option. All right, how to get more help? You can join my free group or community for contractors. The link is in the description below, but there's free resources and tools for your business. Like I've got labor burden calculator in there. I've got the simple pricing estimator in there that helps make sure that you're bidding enough on your projects. That's more for like if you're more of a like residential customers on shorter term projects. Obviously, if you're doing a huge commercial project or a more in-depth huge renovation or remodel project, maybe it's not for you, but if you're in a smaller project, quick turnaround, that kind of stuff, maybe that'll help you out. You can also chat with other contractors, exchange ideas in there. I have free courses on tax, accounting, insurance, and other legal issues you may run into. So if you feel like you're weak in one of those areas or just generally curious and have some time to kill on a lunch break or whatever, you can just pop into that free group and find the videos in there. Link in the description below and get back to work.